Okay, so welcome to chapter one. And in this chapter, our main objectives are to identify the advantages and disadvantages of different forms of business organization. We also want to be able to explain the links between stock price, intrinsic value, and executive compensation. And then we also want to be able to identify the potential conflicts that arise within the firm between stockholders and managers and between stockholders and bondholders. And then we can discuss some techniques that firms can use to lessen these potential conflicts. So what we have here is just a kind of a simple organization chart for a company. And so you've got at the very top the board of directors, and they're kind of overseeing the chief executive officer. So the CEO of the company is the head boss for the company. And then usually beneath the CEO, you've got the chief operating officer, the COO, and the chief financial officer, the CFO. And under the chief operating officer, you've got marketing, human resources, production, and other types of operating departments. Whereas under the chief financial officer role, you've got accounting, treasury, credit, legal, capital budgeting, and investor relations. So usually all of the finance or accounting majors are going to be under this CFO category. Whereas if you're marketing or management, then you're going to be under the chief operating officer org chart. And org charts, this is like a very, very simple one. I've looked at the org chart for Unum a few times since my husband works there and he pulls it up trying to find somebody, and it's a huge, huge, huge chart. So just keep in mind this is a simple example. There are three types of business organization. The first is proprietorship, the second is partnership, and the third is a corporation. And then there's also a fourth one that's called a limited liability corporation. So the advantages of the first two, the proprietorship and the partnership, are that they are very easy to form and they don't have a lot of costs to form them. There aren't as many regulations and they don't have to face the corporate tax rate. The disadvantages of proprietorships are that it's difficult to obtain large sums of capital. Second, that you have unlimited personal liability for business debts. And third, the proprietorship has a limited life. The disadvantages of a partnership are that it has unlimited liability, it has a limited life, it's difficult to transfer the ownership for it, and it's also difficult to raise large amounts of capital. So you can see that several of them are similar to each other. And a limited life just means that they can end, unlike a corporation, which once it's formed, it exists forever unless it goes bankrupt. The corporation is what you normally think about when you see companies like GE or Ford or Toyota or AT&T and ExxonMobil. The advantages of these types of corporations include limited liability. That means that people, if you get sued as a company, they're not going to take your personal house and your car and your personal items like they could with a proprietorship or a partnership. So again, advantages are limited liability, indefinite life. It's really easy to transfer ownership because pretty much you can just sell stocks for the company, buy and sell stocks. And you have a lot better access to capital markets if you need to issue new stock or to issue more debt. If you had a limited liability company or a partnership, then they have the limited liability like a corporation. So that's just a distinguishment for the limited liability corporations and partnerships. The disadvantages of a corporation are that they experience a double taxation of earnings, and that's because a firm is taxed on its earnings, and then you get net income. And then out of net income, the firm pays dividends to shareholders, and those shareholders all get taxed on the dividends that they receive. That's the double taxation. And second, setting up a corporation and filing the required state and federal reports are complex and time consuming. Among the disadvantages of limited liability corporations and partnerships are difficulty in raising capital and the complexity of setting them up. Now, you probably would want to hire a lawyer to help you set up a limited liability corporation, also known as a LLC, or a limited liability partnership. And you might be wondering, if I wanted to start my own business, when should I not consider the first two that we looked at over here, proprietorship and partnership, and consider having a limited liability corporation? Well, you want the LLC if you make a lot of money. If your company is making enough money to where someone would want to sue you to try to get money, then that's when you want an LLC. It's kind of like you have a target on you once you make a certain amount of money. But if you're not making a lot of money with your business, if it's just like a summer lawn mowing business, you're going to be fine if you set up a sole proprietorship or a partnership.